All right, everybody, welcome to the Forex Swing King program. All right, so what you're looking at right now is a trade that I've taken, as you can see, on NZD USD. I'm currently up 22 pips, and we are using as you can see, the H1 chart, which is the 1 hour time frame. The 1 hour time frame, and we have triple arrows here, and so we are rolling on this one here. So we are in that one, and let's take a look at another trade that we are in using the triple arrow system. Another trade that we have taken is, let me pull this one up, we're in the GBP NZD. All right, so let's take a look at that one. We're currently up 17 pips. Again, why did we take this trade? Because you see the triple arrow system, the big green arrow, the small green arrow, and the yellow arrow, and we have bars going in the green. So therefore, we have a goal on this one as well. And, you can take multiple positions or you can take one. All right, and let's take a look at another trade that we're in. All right, let's take a look at this one. I think we're in this one here. Yep, we're in this one because, as you can see, we're up currently 40 pips. And why did we take this trade? Again, we have the triple arrows here, but you will say, well, the triple arrows are way on that side. Why did you take it on this side? Well, let's take a look. Let's go down to the 4 hour charts, and as you can see, the 4 hour charts is triple arrows as well. So this program works very well on any time frame, as you can see here on this 4 hour, and we're on the NZD JPY, and I'm still climbing in pips, up 41 pips in this coin. We're going to leave this for a little while because, as you can see, triple arrows, 1 2 3, big green, little green, yellow, and it went all the way up, and it tells you exactly when you need to get out. When you see the reverse set, which is big red, little red, yellow, saying to go the other way, it drops all the way down. And then what does it do? Goes the opposite way. The market only goes in two directions, up and down. And so as you can see, we have a big green arrow, little green arrow, and a yellow. It came up, came back down, and created what we call a W pattern, or a double bottom. As you can see, one bottom, two bottoms, two butt cheeks. So it created the double bottom, and don't worry about this. As you can see, the numbers will go up and down. If you're brand new in trading, this is quite common because the market shakes and shakes and shakes and shimmy shakes a bit. But in essence, we're not concerned about the little short-term shakes and shakes. What we're looking at is where's the overall market going. And so therefore, with this system, not only do you know when to enter because you just enter once you see the triple arrows, and you exit when you see the reverse triple arrows. But in addition to that, notice we do not have to draw trend lines. We don't have to figure out Fibonacci. We don't have to figure out anything. On this system, it will tell you on its own. Now, there is something that I do recommend. So what you can do, as you can see, when you enter a trade, and this is for all brand new people, those who are actually, seasoned veterans, and watch this. Let's take a look at this. This is so cool. Just for those who's new. Notice right here, we're back on the 1 hour time frame on the NZD JPY. As you can see, what happened on the 1 hour? Triple arrows, 1 2 3. It came up. And then when we see the triple arrows on the reverse side, and I'll have to expand this so you can see the other. As you can see, 1 2 3. And what did it do? And I'll shrink it back down. And 1 2 3. It created a double top. 1 2, and it dropped all the way down. Notice this was a short trade, but then it went into a long trade. This is why we use this system, because what it will do, it will allow you to stay in a trade and know when to stay in and when to get out. Many people would have tapped out right here when it did this little small pullback, but we knew to stay in the trade. Why? Because it did not have the reverse set of arrows. See how simple it is? You just triple arrows, 1 2 3, it goes up. Triple arrows in the other direction, go down, and you stay in the trade until you see the reverse setup of the triple arrows. This is why we knew, okay, even if you got in here, didn't matter. Yes, it did a major pullback, but look where it stopped at. It just created a huge double bottom right here, and then it took right back off again, which is why we have this pattern on the 4 hour. So as you can see, this system works whether we're on the 4 hour time frame, the 1 hour time frame, even on the 30-minute. Here we go again. Look, triple arrow. Now you'll be in and out of these trades much faster. They swing pretty quickly. The lower the time frame, the more swing you get. As you can see here, you get a lot more noise, but it works. 1 2 3, and you still would have got in. 1 2 3, you would have got out, created the double top, and then it went into the big drop. Over here, triple arrows again, and then it went up. Triple arrows again, you get out. Triple arrows, you get in. Triple arrows, you get out. See, look how long that one. See, you don't know how long these trends are going to last. This is why a lot of people who's taking these trades of 10 pips and 15 pips or 5 pips, and they're breaking their behinds for that when you could have stayed in for the long haul. My recommendation using the system for those who's purchasing the system is the minimum time frame that it works best on would be the 30-minute time frame, because you have a lot less noise. So as you can see, the moves will last a little bit longer. And let's measure this from here to here, because it was a double top. We had our entry right here, 1, 2, 3. You would have got in right about here. Yes, it went back, but then it pulled down. And we're going to talk about something in just a moment about the stop losses, because that's important to protect your account at all times. But either way it goes, as you can see, it created the double top, didn't break it, and then it went down. Then when it had the triple arrow again, it 1, 2, 3, and it went up. So some of these pairs that you may like to trade, and as you can see, look at this. So as you can see, triple arrow, it was a short trade here. And how many pips was that? From here to here. Let's say you would have got in right here on the signal line on the third arrow. You would have got in right here and stayed in until you got the next triple arrow. So that would have been, what, 47 pips right there on that trade. Then in the exact same trade, so you don't have to always switch up pairs if you don't want to. You can stay in the same exact pair. Then the next time it rolled up all the way up here to this signal line right underneath the yellow arrow, and that was for 171 pips. Now pay attention to this. So now you have the signal telling you get out of this trade to the upside and get into the other side. See, so all you do is close out this trade here, and then you get in on the other side. So watch this. You have the big arrow, the little arrow, and the yellow. And let's see how long that one lasts. Oh boy, it would have got scary right here, huh? Because it went down, you would have been smiling, then it jumped back up. But again, notice it's not the big arrow saying this is an actual trend change. And by the way, let's talk about this. This big arrow is telling you potential trend change. It does repaint, meaning that it moves a bit, but these do not. So that's the reason why we use all three together, because this one moves about. It's called repainting. In other words, it may start here, but it may end up over here. So it will move because it's just giving you a heads up that the trend is about to change. But these give you the pinpoint accuracy when they're sitting side by side with it to tell you, hey, one is measuring strength in the market and the other one is measuring a crossover pattern, and not the moving averages here, because even if I take these out, which we're using a and let me highlight this so you can see it. I'm using a 13 moving average and also let's pull this one up, a 34 moving average. So that's another confirmation, as you can see here, when the moving averages had crossed over, when the 13 had crossed over the 34, that was another confirmation that it's on the up, as you can see, and it went on where it needs to go. I really don't focus so much on the moving averages like a lot of people do. Some people are in love with the 50 moving average, and some are in love with the 5 and the 13 crossing over the 50, and all these other ones. I really don't pay attention to that. I use it as additional confirmation, just like I do this Osma right down here, which shows you, okay, when it's red, as you can see here, it was the signal. As you can see, it was turning shade darker and went into the red. But I don't really even need this. If I took this completely out and you just use the arrows only and no moving averages, guess what? You still get the same result, because we're really focusing on moving averages. I just like a lot of different color and confirmation, but you know, do what you see fit. But what you want to focus on is just the 3 arrows. Now, also in addition to that, you see these support bars. This is the resistance line that's automatically built in, and the support line. So that's what I really focus on, the triple arrows and a matching support line, because this kind of like tells you, okay, this is the bottom. As you can see, here's the support. This candle, it created a wick or a stop hunt candle to try to tap people out who thought it was going to go down further, or people who had their stop loss in and they tried to take their money. This kind of helps you to understand where to put yours. So that's why I use 1, 2, 3 and this support bar, and you'll get that. Okay, but either way it goes, you don't have to guess how long you need to stay in the trend. It'll tell you. Okay, so even with these pullbacks, it's not finished, because until you see the opposite set, you keep going. So let's take a look at this one as an example, and then I'm going to talk about stop losses. As you can see here, right now, you're looking at triple arrows, and then it went down, went down, went down, went down. Look how far down that pattern went, right to here. See, that's a lot of pips. Let's measure that play right there. So from here to here, we see you got back in here. That was 122 pips right there. Then you had a short run right here. Triple arrows down to the downside, all the way here. Triple arrows again, back up. And so you can stay in the exact same pair over and over again. You don't have to change. So as you can see, here was a short one. It ran all the way down for a long one. Did a little short one. Bumped around a little bit. You didn't catch much on this trade, and that's okay. Sometimes it happens. No big deal. You followed the rules. So it was more of a horizontal pattern. So you got, what, 3 pips? You know, not much. You'd be like, oh, well. But look at how many more you caught. But let's fear no more. When I see a flat move like this, it tells me there's a big drop coming. And sure enough, let's take a look what happened here. 1, 2, 3, and boom. So that's why you had that the flattening out. And it was just going what they call a sideways market. So yeah, it didn't create many pips, and that's okay. You still followed the rules. You didn't lose anything, you know. But what, right here to here was about 8 pips. So you still didn't lose. You just frustrated, but nevertheless, it kept going. But here's where the money came in. Look at that big old drop there. And let's measure again. And this is all on one pair. You can use any pair you like. That would have been 275 pip drop on that move. And then here's another short one. And that's the one we were in as we were looking at, you remember? Because we're in this now. We created a triple arrow, came up, triple arrow, and then it went back down again on the 30 minutes. So you can see the actual move. You couldn't see it here on the 1 hour. You just seen the double arrows. But on the 30 minute, it actually shows you exactly what happened. It went up and did catch some pips. So that's why I said if you want to use it on the 30 minute, these pullbacks, you'll catch them a lot more. It's a lot more... you'll have to pay attention a lot more than on the 1 hour or the 4 hour, but nevertheless, you'll catch these pullbacks. So you would have made 73 pips here, then jump back in the other way, and you would have caught what? Right here, which is where we're in right now. You'll see where I got in, and that is 63 more pips, and now we're on our way. Okay? So until, as you can see, it jumped up to 43. It was just 44 pips in just a minute ago. So that's why I said it'll wiggle up and down. Leave it alone until you see the opposite arrows on the other side. Some of these trades are going to be short and some are going to be very long, but since this one is on the 1 hour, if you take a look, listen, it created a huge double bottom, which if we look on the 4 hour, you can see triple arrow. So this thing has the potential to go all the way back up here. But again, the purpose of the triple arrows is not for us to guess. All right, last but not least, because we're running out of time for this video, is where to place the stop loss. Well, on the stop loss on smaller time frames, when you enter on the trade to protect your account from huge losses, what you can do is simply, once you enter your trade, you'll see that right here is where your green line is. What you simply do is slide your bar right underneath the arrow, the big arrow. So if you was in this trade, you slide it right above the big arrow, right above the big arrow. Right above. See, this is the 15. That's why I don't use it, because it'll fake you out on a lot of times. As you can see, on the longer time frames, it keeps you in the trade longer. So as you can see, if I was in this trade here on the downside, I would have put my stop loss right here. So if the thing went the wrong way, you only would have lost this much, not much. Same thing here. As you can see, you know, if I pull it down just a little bit, okay, that's the perfect set right there. And you can see, and I'll shrink this so you can see, there we are. So our entry is here, and you can measure it, and you see we have a 25 pip stop loss, okay? So the worst case scenario is 25 pips, but we're already up 43, as you can see. So it just protects the account from any losses just in case, all right? So if you have any questions, you know how to reach out to us. Just hit us up on the Forex Swing King and at gmail.com, and we'll answer any questions. And again, we have 2 services available. One, if you want to purchase the triple arrow system so that you can operate it on your own, and it does work on all time frames. As you can see, here's the 5-minute charts. Look at this one. A lot of more noise and short trades, but look at this. Sometimes you'll catch a nice one. Look at this one here. And also sale trades seem to last longer than buy trades either way, but nevertheless, it works on the 5-minute. Here's the 1 minute, as you can see. 15-minute, and so it works on all time frames. But if you want the triple arrow system, let us know. It's a one-time fee of $2.99, and we'll send you the whole setup, and you can trade at your own leisure. If you want our signal service, then that is $49 a month. Now, again, we're running a special that if you would like to have the triple arrow system along with the monthly signal service, so you're taking trades along with us, so you'll know what we're taking and some other things, you know, because sometimes we take trades knowing that the news may come out, which is great because this system on the smaller time frames, usually on the 5, it sets things up right before the news. As you can see, big arrow, little arrow, small one, and then boom, you have a move to the downside, a huge one when there's news events many times.